It's still early. It's still possible to buy Bitcoin today. If you don't have any Bitcoin yet and feel like you missed out, you're not the only one. 95% of buyers also haven't put money into Bitcoin. You're still ahead a lot if you buy Bitcoin now. Things are back to the way they were in 1996. When you compare Bitcoin wallets to the internet, it became very big very quickly after 1996. In other words, it's still early. Bitcoin is something that almost all buyers have never heard of, and about 99% of buyers, because I've never heard of XRP. I'm going to play Tom Lee's clip and explain it to you guys in today's video. I really believe that XRP is a superior option to Bitcoin, and I believe July will be even more exciting than the other months. Also, now is a better month to buy than any other because the price is very low before rates go down at the end of the year. You knew that every day XRP would be worth 3 months worth of money. You could buy it for a tenth of the price. Would you miss that chance? To be honest, I think that's our best chance right now. I'm not going to miss it. I was right about this when I talked to XRP in November. I talked about how the election cycle is crazy. For what it's worth, XRP's price went up 6 times in November, December, and January. Yes, there was a drop from the high point of $3.00 to where we are now. In fact, prices have been stable for some time now. But I want you to know that I've been talking about and buying XRP for 2 years, long before the election chaos. I bought XRP every day on the markets, and I still had a lot of it from when I bought it during the last bear market, which was 4 or 5 years ago. That being said, I'd like to play what Tom Lee has to say because he's videoed today about the future of banks, US debt, and cryptocurrency. Has some great points. Click like so everyone can see it. Hold on until the end. Let's begin. How do you see the market as a whole right now? Where do you think it will be in the second half of 2026? The stock market when Tax Freedom Day came as a surprise in 2025, it was a black swan. Stocks fell 20%, which was one of the biggest drops in 100 years. Stocks have dropped at the same rate and for the same amount of time 12 times in history. A lot of people were wrong to think that shock would make them scared. Like you said, we thought there would be a correction this year, but I don't think we became negative even though this was a big drop. There are 3 reasons for this. Some things about President Trump we didn't see coming from the start. Everyone had to agree to what they said. We thought they would change their minds though, and they did. Taxes aren't as bad as many people thought they would be at the start of the year based on what we've seen so far. Things are better now, in fact, that there would be a decline, which is the second reason. Do you remember how these experts said there would be a recession? That's why everyone sold their stocks out of fear. We don't. To be safe, always pay attention to economics. We'd rather keep an eye on the market with high yields. The high yield market was bumpy, but the way it moved made it look like there might be a growth scare. A drop is not the same as a growth scare. When there's a growth scare, everyone should be careful. Another reason we didn't get down is that V-shaped returns usually come after waterfall drops like the one we saw. That's why we thought this would bounce in a V-shape. The VIX, which measures how risky the market is, went up to 60, which made us pretty sure. And if you look back 35 years, you should have bought stocks every time the VIX was above 60. The market is so scared that no one is setting prices, so you need to buy that. No matter what you think, there was a V-shaped rise in the stock market. A lot of people still look down, even though the sun is almost back out. I might still think that most of you are bearish. Stocks came back, but I don't get it. Right now, I don't want to buy stocks. But keep this in mind, a 20% drop has already happened in 2025. It's not likely that the price will drop by 10% before the end of the year. It's possible, based on numbers, 0%. For now, it looks like the stock market will likely stay flat. It's not likely to go down again, though. There is no rate cut right now by the Fed. He also said he wouldn't lower interest rates because he believes tariffs will make prices rise this summer. That might make sense in some ways. That is, if say I get it, if someone told me that because of taxes, prices should go up. However, that's not the right way to handle money in the real world. The Fed shouldn't really care about changes in the amount of money. Prices should not change because of a supply shock like a tax. The central bank should not change monetary policy to account for that. That's because the Fed wants to keep demand low. When there is a lot of desire for something, they try to make money tighter, which drives up prices. But because taxes are more of a shock to the Fed should look into the supply line. The bond market is starting to believe that. On Wednesday, the bond market didn't agree with the Fed because many people don't think the Fed should be on hold. In the past few days, interest rates have gone down. Yes, that was also our point. If they don't do it now, the Fed needs to cut rates even more next year. Also, most people think that the only reason the stock market is going up is because the Federal Reserve is opening up and letting more money flow through. That's why at the April, when the stock market was at its lowest point, some people said it couldn't get better because the Federal Reserve was going to put more money into it. Guess what? We still bounce in a V shape. And that proves you don't need the government to make stocks go up, but we think they'll cut a lot next year, which is good for stocks. Also, I feel like you didn't really say how we feel about fields this year when it comes to positioning. At the beginning of this year, tech, finance, and industry were the themes that people asked us to cover the most. That was the first, second, and third place. Thus far this year, industrials and financials have done better than the market. Now tech is beginning to do even better. That's what we've really thought all year. But I believe it will be good for interest sensitive when the Federal Reserve cuts rates next year. It should help small and mid-cap stocks as well as financials a lot. XRP, Bitcoin, and other top altcoins have done well because the markets aren't clear right now. They did pretty well. They did much better than most people thought they would at this point. It looks like that's a very strong sign that XRP will grow really quickly once monetary policy is eased and interest rates fall. As Tom Lee said, he thinks this will start to happen in 2026 and that many rate cuts will follow. It looks like we'll see at least a few before the end of the year. Because of this, I'm sure that the fourth quarter, which is the last quarter of 2025, will be very exciting with big gains for all the important cryptocurrencies, such as Bitcoin, XRP, and others. That's what it is then. I'm getting ready for it again, and I can't wait for it to happen. In November, the price of XRP went up 6 times. If you thought that was great, you'll love hearing that I think we could see 10x gains in late 2025, early 2026, when the Fed starts to loosen policy even more. Yes, interest rates have gone down in Europe, Canada, Australia, and even China. This has helped the markets get a lot more money, but don't forget that the US dollar is the world's most common coin. Almost all trades are done with the USDT pair, which stands for US dollar. Futures on Bitcoin. In other words, the US dollar changes the value of everything more. And I think Jerome Powell knows this. He wants to try to stop the market from moving so that he can make Trump look bad as much as possible. Even so, that's the only reason I can think of that makes sense for why his